Hey, happy Sunday. Happy game day, traders. This is SageFT from Live Trading Guest. We're going to go ahead and hit you with the review and rev up for last week and for this coming next week. Hope everybody's team is winning or has already won. Hope everybody's having a wonderful Sunday. Let's kick it off with the daily chart. Let's get the lay of the landscape here real quick. If we go back to before Monday, Sunday night, looks like the world was about to end, okay? But we just removed the removal of the liquidity at the most opportune place. What I mean by that is, if you look at this, the low of this bar for Friday before this last week, we just removed the inefficiencies between here and here. If you look, there's big tails on all of this, so there's no inefficiency here. It's all filling it. All right, so now we've laid it out. We're in position one now as of Sunday night, but we were not in position one last Sunday night. See what I mean? The moving averages are moving the correct way. I can't make these moving averages any bigger. So we've got the 20 moving upwards at an increasing rate, and we've got the 200 increasing at an increasing rate. So we open Sunday night, Monday, however you want to look at it, right here. Either it was going to plummet through here, through this number right here, or it wasn't. And when we look at it that way, this looks a lot clearer. Now watch this. Okay, all right. Oh, we're through the top of the exhaustion bar, as it will, because these are green bars pushing back up through it. We go, oh, now wait a minute. Now, I don't know how to make the tails bigger on TradingView, but just look at your own charts with the daily chart. Look at how this comes right down back into this level. It's like, okay, maybe we're not done. Maybe there is a little bit more supply, if you will. All right, let's take a look at the 4-hour chart. The way that this played out was, remember what we just looked at it on the daily. We have this. So Sunday night, let's just go back and look at this. If we roll in and zoom into this, okay, we're in this gap of inefficiency on the daily chart. The market is a very efficient mechanism because of all of the players around the world. So what are they going to do? They're going to find the inefficiencies in the market, right? So now there's a couple of them. There was one down here, but it actually got pinpricked here. So this is the actual live daily gap of value, right? So let's take a look. So if we start here and we zoom back in, let's say this is Sunday. Now let's just start from right here, and they've filled in the inefficiency. Now let's watch what happens. So the first thing I'm going to do is I'm going to go, is this the Velez exhaustion bar? Here's the actual answer to how to find out if it is or not. We don't know until it removes it. If this is a pull of liquidity to the sell side, all they're doing is to make this large red bar. They're either hitting the bid with sell orders and removing the bid before the sell orders can get to it. Those are the only two ways that that bar can actually move down like that, or a combination of the both. Now watch this. We don't know what this bar is going to do. We don't know if this is the exhaustion bar. Let's find out. Okay, now, well, that's a lot of green bars, right? So here's what we're gonna do. We're gonna take this fancy little thing and we're gonna draw it this way just a little bit more. Ready? We don't know if this is exhausted yet. It's looking like it. Oh, but there's supply here. Let's watch. You can see it. There's supply. Oh, no, we can actually move that this way. Watch this. Now, I'm doing this in hindsight, and I know what actually happened, but let's just watch, because it plays out again and again and again and again. It doesn't matter what chart we're on. This just happens to be the 4-hour chart. Okay, supply. Now, notice we are chilling at this box. Keep watching. We're going to do it just like this. Watch. Okay, bink. A close above this level. After this right here. Perfect. I'm going long here 100% of the time. Let's watch. Let's zoom out. This is important. Really had to finish filling in that inefficiency, didn't it? It wasn't done. Supply wasn't done. Now, on the other side of supply not being done, demand said, thanks, bud. Zoom back in. We're on the 4-hour chart still. We're on the 11th of September here. Watch. This is where it all comes together. This is the pinprick of all pinpricks, because watch what it does. It also engulfs this bar. Now, I don't know if it's an outside bar because it's probably one tick or whatever, right? But that doesn't matter. Boom! Now, what have we done? Let's keep Mr. Boxy in check. What have we done to this box? We have destroyed this box. Okay, enjoy that one. Clip it, ya bottom. All right, here we go. I carry on. So we had supply here. We had supply here. How do we know that there was supply? Because it comes back in. Now we've got the 8 EMA over the 20 period simple moving average, and it turns green. Good, 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 good. Perfect. If this were a 2-minute chart, I'm long 100% of the time. Again, look here. Boop, boop. Okay, now watch this. We're coming back in. Now, this is very important. What we're going to do here is we're going to fill in the inefficiency of, watch this, watch this. What did they do right here? Let's watch. Okay, bumping its head on it, bumping its head on it. Here it is right in here. Here's the top side of it. Here's the bottom side of it. We're above this supply. Let's watch. Boom! They close right up into it, and they just, and so you're watching the low of this bar here. All right, now, boom, we stop right at it, but close right above it. Look at this. So this is the 4-hour chart. It gives us the absolute perfect RBI. Saying that this is not exhaustion. Saying it is not exhaustion. We're long again. Boom. We're off like a herd of turtles. Perfect hook close. Here's the deal. I find it very fascinating that everybody thinks that they're going to lower interest rates on Wednesday. Let's take a look at the news landscape. And let's dive into next week. We didn't even need to go down to the lower time frame. We can see what's happening on this chart. It is bullish. Let's see where we can hit our head real quick. Let's dive into the news at the same time. These levels, this is a very important level right here that we are touching and reversing off of. On the 4-hour chart, look at this. Okay, so from 56.3675 to 56.4475. This is the last gap of inefficiency to the downside before we break 56.75, pushing into 57. Well, Rev, that means we would be into all-time highs. That's confirmed, sir. This is what inflation looks like. I want to remind everyone before we move into what's moving forward over next week. This is what inflation looks like. This is what your grocery bill looks like. Now, they need to continue raising rates. They did not need to stop where they did. I know, people don't like it. Things are getting expensive. Okay, that means you need to produce more income if things get more expensive. If the rate of inflation is beating the rate of the increase in your job pay, you have to do something about it. Why is it the company's fault that your pay that you choose to receive doesn't go up as much as the inflation does that's created by something else that we can't control? The only thing that we can control is finding more income. How are you finding more income? Let's go back to the charts. Let's go to the news of last week, okay? And let's lay it out, and then let's look at next week. We had nothing until Wednesday, really. We had a 10-year note auction, and then we had a 30-year bond auction. So those are what moved the actual market. There was a little bit of move, CPI, 30 points up and down, and then it just kind of rallied. And then the jobless claim PPI final demand came in, right? And we just continued to push through it. They brought the sell in, they brought the supply in, and it didn't work. They absorbed the supply. Okay, let's take a look at what's for next week. Let's move on into next week. Retail sales Tuesday, 8:30 a.m. Okay, now here's where it gets spicy. 2 p.m. FOMC economic projections. FOMC statement at 2 p.m. Wednesday, September 18th. Then the 2:30 press conference. That's when it's going to get spicy. Now, the worst thing that can happen is the market doesn't move at all. Now, here's the deal. I am probably going to purchase a little protection on my IRA. So I'm probably going to buy some puts. They're going to be way out of the money because here's the deal. If they lower interest rates, there is a very big chance we really fall apart. I will take a small risk of some out of the money puts, at least 2 Fridays worth of expiration, maybe 3 Fridays, because that right there, them lowering interest rates right now, listen to me, if you don't know this already and you haven't heard me say it before, if they lower interest rates, that means the economy is, that means they have done their work. Look, I'm telling you right now, why would the government show their hand like that? Why? That would be the stupidest thing that they could do. Okay. Lowering interest rate. If everybody thinks that they're going to lower it a quarter point forecast, why would they? Raise it a quarter point, raise it a half point, get this thing over with, rip the Band-Aid off of this bad boy. They have had bad policy for way too long. Way too long. This is what happens. When Volcker was in, it was upwards of interest rates you wouldn't believe are true. Go back and Google it. I don't want to give you the wrong information. You can find that for yourself. So this is all eyes on this. Now, here's what's going to happen. Watch it. They're going to kick the can down the road, and it's going to be, well, okay, so now we're waiting for blah, 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 right? Well, the PMI comes in, right? The worst thing that can happen for us traders is this number comes out and it flatlines and it doesn't move anywhere. That means the market makers have it priced with the chef's kiss. There's no disagreement in the price. Buy on rumor, okay, last week. Sell on news. Now, that doesn't mean it goes down 1,000,000 points, or it does mean that. What it could mean is the sellers meet demand and it becomes equilibrium. That's always an option. People forget about that. And that's why I say the worst thing that can happen is it goes sideways. The market makers clean house. Apex, Top Step, all of them make money when it goes sideways. Do you guys not understand this? Let's not give it to them, right? Let's not give it to them. Even though I'm an affiliate with several prop firms, I don't want you resetting your account. I want you buying another account because you just passed the last one. And if you're not ready to trade in an eval, which let your coach tell you when you're ready to trade in the eval, right? When you're not ready, you need to be doing something else besides trading and paying to be in an eval. Oh, it gives me a free simulator. What does your coach have to say about that, right? Listen, from the second you get on the first call with me, you're going to know exactly what to do. I'm going to show you exactly how to stop guessing. Oh, how do I trade the FOMC news at 2 p.m.? I will show you. There's some things that we have to cover first. The first thing I'm going to do is I'm going to show you how to stop guessing. I'm going to show you how to relax. Does that sound inviting to any one of you that haven't had a call with me yet? Stop guessing and relax? Oh my God, I'm so stressed out about this, I can't even breathe. Okay, good. Let me show you how to breathe too. While you're trading, remind yourself to breathe in, breathe out. Lexi tells me to blink. Blink, bro. All right, so moving into next week, here's what we're looking at. Let's go back to the chart. Dive in. Here's the expectations of what we have to pay attention to. On the 4-hour chart, we're hitting our head on that bad boy right here. All right, so now, there's nothing else that I can say to you moving past right now. The only thing is, we're either going to go here and down or through here. It's going to close through here above the 45s. And then you're into this last leg here. This last leg, we have a unicorn. All eyes on this FVG right here. Okay, 36 to 45. All eyes on 36 to 45. Let's take a look and see if we can find anything on the lower side. Here's the only inefficiency to the downside. Oh, look at this little sniper shot. Oh, look at you guys. Yes, you think you're slick over here asking me for $200. Here's the harsh projection on the downside, which, remember, on Wednesday, it could clip this in 30 seconds, 10 seconds, 5 seconds. It doesn't matter, right? All of this can be erased in a nanosecond, according to the quants. So we've hit our head here, or have we? If we do, where do we go? Well, this inefficiency was filled in by this right here. So are we going to come back to this block or not? All right, that's long enough for me. Everybody, this is SageFT from the Live Trading Desk. I want you to join us Monday through Friday, 8 a.m. to noon if you haven't already. Those of you that do, I'll see you tomorrow morning.